All right, traders. This is Christian from Tribeca Trade Group, and just a quick video for you before the end of the trading day on Friday. I have to leave right at the close today, so doing a quick video here right before the end of the day and the end of the week. Here's what we have in terms of performance for the day. We've got a day that's kind of whippy, but we've got a nice little recovery here after what 3 days we've been down a little bit. We've got small caps gaining or leading today, up 0.9 of a percentage point. The S&P is now up 0.5%, and the Qs, which were lagging for a good portion of the day, have kind of caught up a little bit. They're up 0.4 of a percentage point. The breadth has been pretty good today, but I think one of the takeaways that I think that's been going on this week, and I think honestly could continue into next week a little bit, is rotation. And if you look at the RSP ETF, that is the equally weighted S&P ETF, that's acting quite well today. That's up about 1% for the day. And the reason why, if you're looking at, say, the Qs, for example, which are up today, which is great, but underperforming that, is because this is more about like a rotation out of some of those high growth names, super high growth names, and into some of the other areas in the market. Now, remember how the RSP and an equally weighted ETF works. Apple, Microsoft, those are big weights in the S&P 500 SPY. But they get actually the same exact representation in RSP as, say, an Exxon or a Chevron. So that tells me that you've got just breadth being kind of spread out a little bit, right? Meaning there are other areas of the market that are outperforming. And, this is just to kind of put things in perspective. And I think why some investors may struggle with this a bit is because we've had just a huge run in high growth, right? That has worked extremely well this year, and especially over the last 3 or 4 months. But what is logical is that at certain times there's going to be profit taking. Funds are going to say they're going to lock in some of their gains because they've made a lot of money in that group, and they're going to reallocate to other places in the market. Unloved places like energy, for example, which is doing pretty well today. Utilities, they're doing very well. The home building group is doing pretty well today. So it's one of these things that we're in a bull market. But from time to time, we're going to see some profit taking and we're going to see some rotation. Now, this is lined up. This is something that I've been, mentioned. I'm tired of talking about this, but I'm going to mention it again. Right? This is lining up right where there's supposed to be weaker seasonality, where like the Almanac Trader tells you that, hey, between the two Russia holidays, Rosh Hashanah and Yom Kippur, which started earlier this week, and it ends on Thursday, Yom Kippur, that there's typically market weakness. So this should not be a surprise to anybody, especially if you've been regularly tuning into my videos, because I've gone over this before it started, as it's been going on, just so that people are not thrown off guard by market weakness. Now, I will say this, it's been pretty orderly so far, right? If we look at the performance for the week, right? The S&P is down, and I get it. You may have felt like, oh my God, this is different because we haven't had many weeks where the market's been down over the last, few months. But the S&P for the week is only down 0.5%. The Qs are only down 1% for the week. I had somebody, and it's, social media is a funny thing, and I get a lot of dramatic responses. But somebody was trying to tell me that the S&P and the Qs were down 5%. I'm like, what on earth are you looking at? Now, okay, you can look at your high growth stocks. They've had more of a pullback. And you could argue that they're probably due for that. You can't go up 30, 40%, you know, without having any type of a check back. And if you are new to markets and you've never seen a pullback before, that's what the market's all about. The market does go up and it does go down over time. We know that the market does go up over time. And you go back from the history of the U.S. stock market, right? There's dips, there's bear markets, but over time the market goes up, right? And the whole name of the game is not to give back your profits while the market is kind of chilling out and pulling back a little bit. But if you've been doing this game correctly, right, you want to be playing some offense when the market comes in a little bit. Now, none of us have a crystal ball, and I'm going on basically seasonality and where I've known in my trading career over, over plus 20 years that not every uh, two Jewish holidays is the market week, but the majority of the years, yes, it is, right? And it depends. I think it's usually down on average about 0.5% or something like that. What's the S&P so far down? 0.5%. So we know that we also have some. I'm just kind of jumping into next week a little bit because this is an end of week video. But we know also that Tuesday is going to be month end, right? There's been data out about what the pensions are probably going to do. And tends so when it's quarter end, there's a lot of like changing around portfolios. There's a lot of like, hey, let me take some profits in some areas and move into some other areas. So I don't know if that's being front run a little bit this week, and if you're going to see that as well on Tuesday. But I wouldn't be sticking out my neck and buying a whole bunch of growth names with big size until at least we kind of get a little bit closer through that and until the end of the second Jewish holiday, which is on Thursday, right? The age old saying is sell Rosh Hashanah and buy Yom Kippur. So that's on Thursday, guys. Also, I just want to bring up the technicals, right? Because I do believe that there's a little bit of a pattern here over the last couple months. Over the last couple months, what have we seen? At the end of July, selling. At the end of August, selling. And that included the first day of the month too, right? Where we kind of gap down on those days. So we've got that next week. Do you want to be sticking out your neck when you know that there's these dips, and then after the dip the market has gotten bought up like crazy? So do you want to spend a lot of money positioning in here, right? Positioning in here, right? Or would you rather wait until things kind of straighten themselves out? And a good thing to, in my opinion, to watch is when price gets back above the 5-day moving average. We're not there yet. So rather than use crystal ball stuff, even though I am talking about seasonality, which again gives us a little bit of an edge because it tells us where the market's strong and where the market's weak. But I would say that, watching to see when price gets above the 5-period moving average is a good sense of when momentum is coming back into this market. That's been a good signal all through the last 3 or 4 months. Notice every time, and this is why I use when the market's really trending, I tend to use the 5-day moving average quite a bit, right? Because it's just a very good guideline of whether the buyers or sellers are in control. And since we've gone down in April, May, and the market's retaken that 5-day moving average, it's been a very good guide, right? When it dips below the 5-period moving average, watch out for a couple days. There's a little bit of a drawdown. Same thing in here, same thing in here. We're also below the 5-day moving average. Now we're close to retaking it, but I don't know if we're going to do that today, right? And knowing what we have next week, it makes sense to kind of continue to be a little bit defensive. And as I have said, I think I said in yesterday's video, the day before, if you're buying the dip, personally, I'm doing more nibbling into the dip, right? So I can have several entry points if the market continues to move a little bit lower. Here's what the Qs looks like. Right. This is also another thing to note here, how far the 5-day moving average is above the 20, right? That's usually at some point these kind of come back to meet one another, and that ends up in a bull market, which we are in, ends up being a good buying opportunity. So that's basically it, guys. It's just being a little bit defensive when the market loses some momentum. So going back to the performance of what we have, right? Where we're basically in between, somewhere between like 0.5% to 1% down. Same thing with international. Gold has been outperforming. Bitcoin and the cryptos have had more of a drawdown, and to me, that's been a little bit of a leading indicator that some volatility was coming in the market. Looking as well as what areas have outperformed. It's been energy, which has been up nicely. I think that's part of rotation. I think that's also part of some geopolitical escalations as well. So you kind of have a little bit of a combination there. But you've got plenty of areas that are doing quite well this week, too. It's just not those super high growth names that have gotten extended, right? So this is just a little bit of trading 101. And again, if you've been doing this for a while, you're probably familiar with how this works, that names will get extended, and especially in the high growth group. And we've seen this several times over the last few months. Here's the IBD 50 ETF. Yep, very nice performance over the last couple months. And note it got extended here. Note as well how overbought the RSI was. It was a 77, the most overbought it's been all year long. So yes, this should not come to a surprise to anybody that we're seeing a little bit of a give back right when the weakest seasonal period of the year kicked in. All right. So and here's your check back to the 20-day moving average. ARC as well, which is a basket of high growth, very high growth stocks too. Note that this was an overbought territory. I don't think the trend is going away here at any time, but we're just kind of taking a pause. Events to watch for next week. So I'm not really going to go over single stocks because I'm trying to keep this video short. As I said, I have to leave shortly. Next week, there is rumors of a government shutdown. Again, what that could cause is probably buying opportunities. Every time that they talk about shutting down the government, it eventually gets resolved. And there's some short-term volatility, and that usually ends up being a buying opportunity. We're going to get things like the ISM. We're also going to get a new jobs data because it will be the first Friday of the month, which will be the 3rd. So there you go. There's a couple things to watch for next week. Guys, have a great weekend. All in all, this week was not, for summarize my trading, a little bit of, frustration with some trades looking really well and then kind of reversing. Again, should I be surprised at that? I shouldn't be surprised. Am I a little bit disappointed in what MP did today, which had a nice bullish engulfing candle yesterday, but corrected down 9% today? Yeah, that's a bit frustrating because I had to get out of that position today. Even though the trend hasn't been broken, it looked like it was going to break out after testing this top of the value area. So I have some trades on like that happen to be this week. That's par for the course. If you're not taking off this week, right, and not putting yourself on the sidelines of trading, unfortunately, you're going to have a couple of these trades in there because that's how this market has been trading this week. Whippy, rotation, and I get it. If, I don't think personally, like I want to rotate out of all of tech. I think these will be the buy the dip opportunities. Um, but you have to be aware of just a little bit of short-term volatility. All right, guys, that is it for the weekend video. I hope that you had a decent week and survived a slightly down week. And we'll go on from there, guys, and look to face a challenging week next week, I would imagine, with month end. I will say this too before I kind of end for the week here, that I'm looking forward to the quarter end day. There should be some good option trading opportunities, both on the long side and on the short side, right? If you could play both sides of the market, and if we do see some selling pressure at the end of the month, sometimes like the last 20 minutes of month end, quarter end can be quite exciting, and markets can really move one way or another. So am looking forward to those trading opportunities next week to kind of kick around some options and try to make some money with month end, quarter end volatility. Have a great weekend, guys.